We went from dramatically oversold to pretty overbought in a relatively short period of time. And January was as strong, if not stronger, than last year. So it was a pretty fast start out of the gate this year. Valuations obviously came down a lot. But as Bapazani was suggesting, we're also seeing this issue now with earnings estimates being lowered fairly dramatically so far this year. And so I think that's a headwind for the market, as are these China trade talks.
It's hard for stocks to make much progress when earnings are not growing.
When they're not growing, absolutely. And with estimates coming down, it is easier for companies to beat expectations. But we're coming off, as we started talking about last March, maybe peak profits and peak profit margins. And that's something that this market has dined on for quite a long time.
Rich, you heard, I'm sure, Kayla and others report that it seems at least a little less likely that there's going to be some kind of comprehensive deal on trade as of March 1, but that there may well be a citation of enough progress being made to postpone the escalation of tariffs or the introduction of new tariffs. Would that kind of outcome be enough to let the market move up from here?
It'll help, but it's not going to turn this ship around at this point. Global economic deceleration, economically speaking. You have negative earnings guidance. You have an inverted or kinked yield curve, and anything inverted or kinked in the financial markets or in life's never a good thing. I mean, it's really
in life being inverted or kinked is generally not what you want.
It's really hard to see the bottom from here. We're looking for a little more clarity. Trade talk, if there's some good news there, that might give a pop to the markets in the short term, but it's not going to deny the direction of this economic cycle.
Rich, how the hell did we get in a year's time from everybody cheering and talking about global synchronized growth to where we are today?
Oh, it's been a long time coming. I mean, we had a 9-year economic recovery coming out of '08 and a bull market run. It's the return of the economic cycle. I'm not saying we forecasted it with precision, but, we knew it was going to come at some point, and now we have it. And it's not the case that we're looking necessarily for a hard stop recession.
Not many people were saying it a year ago. I mean, I don't know whether you were, but not too many people were.
Well, fortunately for us, we took our foot off the equity gas pedal early last year, arguably a little too early, a few months too early, but we were well positioned in our target date funds, some of our other stock funds for the turn, and we remain that way. We are not buying on the dips. We're not going to catch a falling knife here.